dive into the weekend outlook. We'll take a look at some of the projects that are moving and shaking, and also take a look at some of the big movers that are starting to make some interesting plays in this chess match we call crypto. We're going to dive into all that good stuff. My name is Paul Bear. Welcome back into Tech Path. All right, let's get into the first topic. And I want to go into the macro a little bit. Then we'll slide into a handful of announcements that's been done by major banks, talk a little bit about tokens. You want to stick around for the whole video. CryptoCon came in and said the most feared macro event of them all is the yield curve inversion pivot. This could finally be happening. Bitcoin has only seen one of these before 2020, and it's an extremely accurate recession predictor. Now that the yield curve is more inverted than ever, seemingly already pivoting. I'll show you a chart here in a second. There are many reflections of the 2008 housing market crash. Were you guys around on the 2008? Did you understand what was happening at that time? That was when we saw pretty significant wealth loss in the United States. So it also happened in the 2000s during the dot-com crash. I got a chance to see both those, so not good. But not all pivots cause catastrophe. And if you look at the yield curve inversion chart that they're showing right here, let me kind of show this out a little bit. You'll notice that the big dates here, we'll go to the 2000, the dot-com bubble. Right there is the yield inversion going up, and then right there is the market crash. Same thing here on 08, yield inversion. And what we're dealing with right now, COVID's a little different, but what we're dealing with right now is this right here. This pivot point right here could be happening. And if it is, are we in the potential free fall position right now for market crash? That's what a lot of analysts have been pointing to if you continue to read these charts and these historical markers over time. Some other things on Twitter right here. Peter Schiff comes in and says, hey, even if the Fed is done raising short-term interest rates, long-term rates still have a long way to rise. In fact, easing up on inflation fight means long-term bonds become less attractive, meaning much steeper yield curve, which pushes it back to the point of yield curve go up, market go down. So these are the problems that we could be facing still here on a macro. So if you are thinking long-term and you're saying, okay, well, when is the good entry point? There are a handful of projects out there that are on the move right now, and you're probably in a position where maybe you could just trade them. But are you in a position now to maybe sit on the sideline and say, okay, I'm going to wait for Bitcoin to go sub 20, or I'm going to look at Ethereum somewhere under the 15 mark? What is it that you guys are waiting on to really kind of start putting your position? Because I think we're going to get into a zone here that we're going to see a lot of this movement. RNC came in and says, economist Stephen Moore, consumers are getting more in debt. And this is something we've talked about for over a year, that credit was coming. Well, it's here. Now we're more in debt, carried by American consumers to maintain their living standards because of inflation. This is something that will hit a wall at some point, and it will cause major movement within the economy. And what I mean by that is loss in sales. I was doing an analysis the other day just on restaurant stocks. And restaurant stocks go, no matter who you look at, we're all down double digit. These are massive stocks that have continued to take the try. Now, the reason that's important is because retail is usually driven by eating out, and eating out is one of the biggest factors in determining strength of consumers. So again, goes back to credit, big one for sure. I want to play a clip for you right here. September report on the jobs. We're up, and this is a little bit of a fake out, but listen in.
Let's get right over to Rick Santelli with those numbers. Rick, take it away.
Yes, jobs numbers for the month of September. Non-farm payroll, a whopping 336,000, much stronger than what was expected in the 165 to 170,000 camp. And if you look at the unemployment rate, it remained at 3.8%. It remained at 3.8%. And if we look at average hourly earnings, they also remained it up 0.2%. Now,
all right, so a couple things there. The jobs report in itself, I still think this is a bit of a fake out. The reason I think that is the pressure that we've seen in terms of many of the companies that continue to hire. When they talk about non-farm payroll, really this is talking about the hospitality industry more so than any. And what I mean by hospitality, everything with restaurants, hotels, et cetera. A lot of that was suppressed over the past couple of years. So much of what has been happening in the jobs market, and I've said this before, is a continued adjustment there. However, when you look at the outlook for that industry, things do not look as rosy, and I think that's where it's going to be going. Here was the Kobeisi later talking a little bit more about this. U.S. economy added 336,000 jobs in September alone, but what many headlines don't mention is the revisions to August jobs numbers. This showed 227 being added in August, while the above previous was around 187. That's 40,000 more jobs on top of the 336 in September. So how can the Fed pivot? That's going to be the question, because if you're continuing to add jobs, it means the economy is growing. And the Fed is not about to pivot in that kind of scenario. I think we're going to hit a steep wall here in terms of jobs. Does it happen at the end of this year or first quarter in 24? That's the real question mark, because that will start the process and that domino effect that will start to affect movement by the Fed. Donald Trump, of course, is seeking to reassert himself as the GOP kingmaker in the House speaker fight, which is his authority and approval of, a non-crypto guy in Jim Jordan. So I don't know. I look at this, and we just did a video on this talking about the potential for Tom Emmer, the potential for others in the fight there for the speaker position. It could slow down a lot of legislation. I think that's the thing that I'm most concerned about. But if they do come to a swift decision, maybe Patrick McHenry and his office can continue the fight going forward. Big news on the headlines this week was, of course, Chase. Now, customers can pay mortgages using crypto through FCF Pay. Now, there's a couple of points in the article here that I want to be clear with. JP Morgan Chase has teamed up with FCF Pay, a Canadian blockchain payments processor, to offer customers the option of paying their credit card, bill loans, etc., mortgage payments, including using cryptocurrency. Now, be aware, though, customers can make payments using a variety of popular cryptocurrencies, including Bitcoin, ETH, Shiba, Ripple, etc., as well as stablecoins like Tether. One thing to note, though, is that when the payment occurs, JP Morgan Chase is actually seeing that flip over to fiat. So it's not like they're accepting crypto and then they're going out and putting it in the markets. No, this is a flip to fiat. It's just making it more convenient. So they'll take your crypto and they'll take your money. And I think we'll see a lot more of these kinds of companies out there. FCF Pay, if you want to learn a little bit more about them, you can kind of jump over to their website. They're doing this both on merchants for merchant transactions as well as individuals as well. So I think that we'll see more companies that will go this direction. And that's kind of that half step. If you think about the markets, what do they can do to really kind of get involved without going all in? I think this is a good move by JP Morgan Chase. Now, Brian Armstrong, he's not so bullish on a lot of the moves that some of these banks are making. Totally inappropriate behavior by Chase UK, and we talked about this earlier this month. And this was Chase really putting a lot of pressure on crypto as a whole. Now, we've seen a lot of banks here in the U.S. not necessarily as significant in terms of holding you out of going into exchanges, et cetera. But remember, MiCA is in place in the UK, along with EU, coming in 2024. So some of these banks may just be prepping for some of those restrictions as we go forward. Here's a clip just to give you a refresher on Jamie Dimon's position on crypto. Listen in.
Bitcoin itself is a hyped up fraud. It's a pet rock.
You're back to that?
Yeah,
really?
Of course, yeah.
So what do you make then of BlackRock and other firms that are investing in infrastructure?
No, that's different. Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to move money.
Right.
So that is a ledger. That's a technology ledger type of thing that we think will be deployed.
All right, so he hits on a few things. He likes the tech, but he doesn't like certain assets within that. Just remember, this is the head of JP Morgan Chase, but the real question is, they're going to go ahead and continue in this traction because they see the rest of the market. They don't want to be the one man out. JP Morgan Chase, obviously one of the biggest players out there. But I think that a lot of the emerging stars within these bank and institutions, they're younger. They understand what is up. And I think we will start to see a little bit more of movement. You're already seeing it with Fidelity. That's kind of interesting too, because they take almost an opposite opinion of what Fidelity, which is a very digital asset forward institution. And then you look at BlackRock, obviously going for ETFs. There's a lot of play in the traditional markets that I think these guys are posturing. They're posturing. We know it and they know it. And I think the problem is I don't know if they know that we know it. We'll see. Anyway, rise of Ethereum staking came at cost of higher centralization. This is again JP Morgan talking about this. Now, there are a couple of points here, and that is when you look at staking ETH and the centralized positioning of this ETH being controlled by a handful of companies. Lido, of course, or Lido, holds a strong position lead. Of course, Coinbase right there behind it. And between that, you think about this, the top 5 staking providers right there, Coinbase, Figment, Binance, Kraken, control over 50% of staking on Ethereum. So I know a lot of people would look at this and say, hey, it's not really a big deal. These are staked. You won't see massive moves in the market because of the staking process. I would say maybe that's half true in the sense that I just don't like any one location. And that's the whole point of crypto. It's the whole point of decentralization. So it's something to think about as you get out there. Crypto community has seen decentralized liquid staking platform Lido as a better alternative. So centralized staking platforms associated. But again, you still have centralized. Hopefully nothing ever gets in the way of Lido in terms of regulation or something crazy going on. Other things that are happening is, of course, the ETF race and the ETH futures ETF starting to see a little bit of inflows here. Not a ton, as Eric Balchunas says, around 15.6 million with Van Eck in the early lead over ProShares. Now, one thing to be aware is that the amount that they're getting right now is considerable, considering this has only been out a week. And if you look here, this was the breakdown right here on Valkyrie. And you can see Van Eck right there at 305,000. That was the value traded. This was about a week ago. So when you go back to this, now you're at 8.27 million. These are massive, massive growths. I mean, what is this going to be at in another week or another month or 2 months? Could we see double digits or all the way up to somewhere in the tune of 100 million? If we get into those kind of numbers, this is going to get significant pretty quickly. That will start making moves in the marketplace. Further in to the news, of course, is Flow. Breaking now, Flow introducing plans for EVM equivalents. This means EVM compatible contracts on Uniswap, CryptoKitties, MetaMask, all deployable to Flow now. This is a big deal for Flow. You know that Flow is one of the blockchains that we cover quite a bit here. We like this project. We like this token. But again, it's a big deal for Flow. Here's just a little bit more on their forum. And you can kind of see Ethereum dApp, no code changes. Take full advantage of functionality of native Flow, trusted tools, etc. Uniswap, OpenSea, MetaMask, Chainlink, Oracle. All these will be able to function on Flow out of the box. So this is another big one as well. Remember, these are equivalent EVM equivalents of Flow, giving developers kind of a complete flexibility to kind of go across all of this. So again, more benefits to some of these projects. And this is the thing we've talked about before, is that these guys that, and I've talked about this a couple times in the last few videos, is the builders that are still aggressively building, because there's a handful of projects out there, I won't name who they are, that are not aggressively building, but these are the ones that are aggressively building. Avalanche has been out there. Obviously, Solana, we'll see a lot coming for Breakpoint coming up at the end of this month. And then Flow, I think, on the Web3 side is going to be huge. Real world asset project backed issued tokenized security on Base. This is something we've also been predicting, is that tokenized securities are coming. So Bakkt has issued a tokenized security product on Base named, what is that, BLBO1, which tracks short-term U.S. Treasury bond ETFs. This again gets back in traditional finance. That's something that I think even Larry Fink from BlackRock has talked a lot about, and that is the tokenized assets future and what that looks like. So further in this article, these are collateralized by underlying asset and then are freely transferred across wallets. This is the benefit of tokenized assets and tokenized scenarios, especially in securities and other financial instruments out there that I think now BlackRock is starting to see the light. Remember, he did not see the light at one time. So just remember, Fink was on the other side. He was on the dark side there for a little bit. And just to remind you guys, rather than stablecoins, BackFi, tokenized U.S. Treasury bills ETFs, were used as settlement currency. This is all happening as well within the Avalanche ecosystem. So another big deal. And if you don't watch our show very much, what I'm going to say is do this. First, subscribe to the channel right now. Make sure and smash the like, because it does help others start to learn the process of not only research and how important it is, but these small little nuances that make massive opportunities occur in how you go into these projects. And what I mean by that was this right here. Remember this video? This was 2 weeks ago. We did this video. And that is Avalanche, Chainlink, right there, assets of this type, all going to start tokenizing all things out there. So this has pretty much been predicted for quite some time. We're showing it just in the sense of the research and the amount of major players that are starting to take steps in this direction. So I think Jamie Dimon's probably on the wrong side of history this time around. I think Citi, obviously what we'll see with BlackRock, these guys are big players. And then you look at Fidelity, which I think is a sleeping giant in terms of digital assets, especially because they are so pro Ethereum. Again, digitizing securities and tokenizing the world of financial instruments is going to be a big deal. All right, so that's going to be pretty much our wrap, but I want to make sure and remind you guys, get into the Diamond Circle because it's another place we do additional content. And we're doing a lot more of it that does not arrive here on YouTube. So check it out. It's very easy and it's free. You guys catch me out there on Twitter, X, it's @Paul Barron. We'll catch you next time right here on TechPath.